The digital asset investor. I'm sorry I did not make a video yesterday. I had to go out of town for a day, but I'm back today and I have what I believe is a very interesting little video to do for you here. I wanted to start this by telling you that back when I invested in XRP, I told my wife that if my hunch was correct, that we would eventually sell our XRP, and I told her that I would sell my XRP when the average Joe could go into their E-Trade account and either buy XRP in their E-Trade account or transfer XRP into their E-Trade account or call their broker at another brokerage firm and say, buy me 10,000 XRP. And the reason I told her that would be the day when we would sell, or close to the day we would sell, is because then I would know that access had been completely opened to the average Joe investor, at which time most of the money, the real money, will have already been made. And so I spent the last few years watching this market, and it was not until 2017 that I heard the two magic words that I was waiting to hear. All of my hunches, everything that would be the ultimate thing to happen with cryptocurrencies, I knew it was going to happen the second I heard these two magic words. Those two magic words were asset class. I began to hear the guys on CNBC talk about cryptocurrencies in terms of a new asset class. Now, anybody who's in the financial game, anybody that works at any of the brokerage firms or Goldman Sachs or any of those places, they instantly know what an asset class refers to. But I want to explain to those of you that don't have any clue what I'm talking about, I want to explain to you what that means. I've told you before that I was a financial advisor I am not now, but I was a financial advisor with probably one of the top two brokerage firms on Wall Street back in the 90s. When you become a financial advisor, after you pass your Series 7 and your Series 31, and you go and do your training, what they're training you to do, they don't say just go out and start selling people stocks or selling people bonds. What they want you to do as a financial advisor is they want you to sit down with clients and then decide what risk level, what kind of a risk tolerance those clients have based on their situation and their age and different things like this. In other words, an older person is not going to take risks that a younger person does, and an older person may need income instead of growth. And I want to show you briefly. First, this that you're looking at is an article, 2017, the year the crypto became a new asset class. Now, the second that they started referring that to an asset class, I knew where this all ended. And I'm going to take you through. I want to show you, explain to those of you that don't know a little bit about what an asset class refers to. This is showing you common asset class allocation in the different asset classes that was common back in the 90s. It was a heavier weighted in stocks, but asset classes refer to stocks, bonds, cash, gold, and every financial advisor, whether it's a financial advisor speaking to an individual family, or if it's a financial advisor who's managing an institution's money for the teacher's retirement fund of some certain county in some certain city, they all approach it from this angle. And so traditionally, you've had stocks, you've had bonds, commodities, and all of these things. REIT refers to a real estate investment trust, and then you have cash. And what a financial advisor does is they'll sit down with a potential client and they'll actually create a model, and they'll say, based on your age and your risk tolerance and all these things, we think that you should allocate X, at maybe 60% in stocks and maybe 20% in bonds and 5% in commodities. And they divide it up like that. And that way, that client is not going, their portfolio is not going to just do a deep dive because they've got everything in stocks or everything in gold or whatever. And it's a way for them to diversify their risk. So as you can see, like stocks can be broken down even further. They may have 60% of your money in stocks, and then they'll have in larger caps, the larger capitalized companies, which might be the companies in the Dow Jones top 30 companies by market cap, and then they'll invest some percentage of it in mid cap, and then a smaller percentage in small cap, more growth oriented companies, and then emerging markets or international companies. But this is how financial advisors approach investing the money of individuals and institutions. And so I go over all of this because I want you to understand the second that I heard the guys on CNBC and read articles and started hearing them referring to cryptocurrency as an asset class, I knew what was going to happen, because these guys, they want it to be an asset class, because the second that it's an asset class, they know that the money's going to be made, and that means that ETFs and mutual funds and people can start hedge funds around cryptocurrencies. And what they're going to do is they're going to dedicate some percentage, probably a smaller percent, it may be 1% or 0.5% even. And so you might have stocks, bonds, and you're going to have a little sliver in here, for not for this year or for next year, but for the rest of time. You're going to have a sliver that's going to be cryptocurrencies. Now imagine if the world's money all of a sudden starts getting put in, a sliver of it gets put into cryptocurrencies. Well, that's what's fixing to happen, and I'm fixing to show you that it's going to happen. Okay, so let's just assume we're talking 1%. All right, well, don't take my word for it. I want you to take the word of this Goldman Sachs employee right here, because this is happening in mass right now. Goldman Sachs banker waves goodbye to Wall Street's security in search of crypto riches. Here's a guy who they said in this article, his name's Chris Matta. This guy was in line he's probably making over $1 million a year. They said he was actually, he forewent his bonus that he was about to get for having such a good year, and he left to go to crypto. He had just been promoted, is what they said. Well, this isn't just this one guy. This is many, many people in the banking industry that are leaving right now, the investment bankers. And this guy is going to start. I read further in this article, further down at the bottom, it said that he and some of his buddies from Goldman Sachs are going to start Crescent Crypto Asset Management. So what I wanted to do is I wanted to take you a step further. I went to his asset management company that he's creating, and I want to show you how these guys think. These guys are seeing dollar signs, and the crazy part is that this guy was already probably making millions, and he sees more money in crypto. So he goes and he forms Crescent Portfolio Holdings. And I want to show you, this is the birth, this right here you're looking at is the birth of the crypto asset class. Asset class, those magic words. Now look what they're doing. So this is basically an asset class, and now they're showing you how they now are going to divide up all of the clients that are going to this asset management company that this guy's forming. They're dividing these asset classes up. So if you're a crypto investor, know that if you're in say the top 10 or 20 cryptos, then you're going to be in this game right here. It's going to be hedge funds, ETFs, mutual funds, portfolios, thousands and thousands of companies. But look at this. This is how they're going to divide this up. That 1% sliver that I was talking about, let's say 1% is going to be right here. Well, that 1% in this guy's firm, when you give that crypto, if 1%'s in this, well, guess what? In his fund, 9.4% is going to be XRP. If these guys really, really, really knew what they were talking about, they haven't been as far down the rabbit hole as I have studying this, and probably you neither, because I've been in this game for 4 years, And these guys are probably in the last couple of years they've been studying this. But the truth be told, this 9.4 should probably be this 42.6. But I won't get into that. What I wanted to show you is how you're watching a market being structured right here. And what they're doing is they're also dividing, they're parsing what the different cryptocurrencies are for now already. And this is a new thing. I just noticed this the other day when I looked at this website. They're calling Bitcoin a store of value cryptocurrency. Ethereum is a platform cryptocurrency. They're calling XRP a value transfer, but what they're wrong about there is that XRP is all of the above. XRP is also a platform, and it can also be a store of value because, in my opinion, it's more valuable than any of them. But anyway, I wanted to show you guys this. Now, the other part of this video that I want to go over that's so important, that I think is the most genius thing. Every time I think these Ripple guys are genius, they completely surprise me, and I find out they're more genius than I even thought. Because Ripple knows, they know that all of this money is coming. They know that every penny of this money is coming. They know that it's coming. And what they're doing, in other words, they know that the average Joe investor, like I said, I told my wife a few years ago, I told her that when the average Joe can send his XRP into an E-Trade account, that's when we'll know that we did everything. We got the most out of this that we thought we were going to get out of this. So what does Ripple do in anticipation of what's fixing to happen? What Ripple is doing, and I equate it to pouring gasoline on the what is going to be the pop culture XRP bonfire, because XRP is going to be probably the biggest of all of these in the end. But what Ripple is doing, the genius thing they're doing, is they are taking their capital that they have from the cryptocurrency, and they are pouring literal gasoline on the hordes of the populace and the pop culture that is going to be the investors in all of these cryptocurrencies as soon as these platforms are open to the common person. The average person who's not that sophisticated, they know it's coming. And so what are they doing? I'm going to show you the first thing Ripple did. Everybody knows about this by now. Excuse me. Ripple gives away $29 million. The first thing they do is they donate to the public schools through the donorschoose.org. Now, I'm not saying that Ripple is not a kind-hearted company and doesn't want to give away money and do good things for good people. They do. But I'm also saying that this is a plan, because if it was just this one thing, then maybe I wouldn't say that. But I've seen 3 or 4 things now, and so now I know they have a plan. What they're doing ahead of all of this avalanche of money coming is they are putting themselves into the pop culture. So what do they do next? They have Snoop Dogg, and he performs at Blockchain Week in New York City. What better way to plug into pop culture than Snoop Dogg? Okay, so Snoop Dogg's the next thing I see. And then they announced the X Spring initiative, where they're basically creating an incubator so that they can have new companies created that only use XRP in their operations, new ideas. But then I scrolled down a little further in this particular article, and it says enter Bieber, kinda. But it's not kinda. This is a thought out plan. They know exactly what they're doing. So you go down to this paragraph, and it says that Scooter Braun, who was the manager of Justin Bieber, is pursuing several endeavors that will use XRP to improve artists' ability to monetize and manage their content. So they're plugging into this pop culture, and it is literally, this is going to be huge, because the second you plug into this, it'll spread like wildfire. They're pouring gasoline on a bonfire. And then the best of the best of the best. Yesterday, when I was on my way out of town, I saw this and I could not believe it. And I was like, whoa. And you may not be able to see this. Anyway, there's a whole here. I can skip this. I don't know if you're. I don't know if the sound's going to be right, so I'm not going to go through the whole thing. But this was on the Ellen DeGeneres show. Ellen DeGeneres show yesterday. Ashton Kutcher gets on there. Not only does he say he's an investor in Ripple, then he proceeds to tell her that Ripple is going to give $4 million to her favorite charity, then proceeds to transfer the Ripple $4 million from in US dollars, transfer it, and he goes further to explain that it's going to go through XRP and then it's going to come out the other end in the native currency of her charity, which I believe was in Africa or something like that. But I saw this, and this was when I finally realized. I've always thought Ripple was going to be huge and XRP was going to be huge. But when I saw this yesterday, she reaches over 70 million people. And then I saw her tweet this out to another 78 million thanking Ripple. If you're in any other digital currency, and I'm not saying that a lot of them are not good, but if you are doing anything other than putting as much money as you can afford to put into XRP, you're out of your mind. Put as much money as you can if you can afford to lose it, put the money in there, because there's a huge, massive tidal wave, and Ripple is doing all of the genius things to stoke the fire. And they know that a pop culture fire is going to be lit once the money is freed to start going into this market, and they are doing everything that's smart to keep it going. I am the digital asset investor, and I really appreciate y'all watching my videos. If you will, please spread this around. I'm trying to get more subscribers. I would like to do this full time if I could get enough subscribers and enough of a following to keep it going. Please subscribe and hit the like button as much as you can. And I'm not an investment advisor. I told you I was a financial advisor for a few years, but I'm not an investment advisor now. And so this is for purely entertainment purposes. But I really do appreciate everybody watching. Thank you.